Hello and welcome. Yesterday, the European currency tried to extend losses against the US dollar, but bulls managed to protect the support level of 1.0673. The euro was supported by fairly upbeat data on European economy. Traders were pleased with the investor confidence index, which increased, leaving negative territory. The key focus of market participants was on the US trade balance. Trade deficit narrowed, which boosted demand for risky assets. In the late session, bulls made an attempt to break above highs but failed. As a result, the euro-dollar pair remained range-bound. As for the British pound, the situation was a bit different. After British Prime Minister Boris Johnson survived a confidence vote on Monday, the pound sterling dropped significantly in the Asian trade. However, the better-than-expected services PMI led to a sharp rise in the value of the British pound. Then, bulls pushed the price to highs posted on June the 3rd, but the price failed to consolidate above them. Thus, the pound-dollar pair continued to trade within a wide sideways channel. Today's macroeconomic calendar is full of important releases. France and Italy are set to release data on imports and exports, as well as statistics on trade balance. The euro area will report a change in employment and first quarter GDP figures. In the second half of the day, traders may take notice of US wholesale inventories and wholesale trade sales. However, these reports will hardly lead to a steep rally in the value of the greenback. Therefore, the euro-dollar pair's range-bound trading is likely to continue. As long as bears are taking the lead, one can count on a drop to 1.0666. If the price fixes below this level and tested from the bottom up, the euro will come under stronger pressure and slide to its monthly low of 1.0630. A false breakout at this mark coupled with a test of the lower boundary of the current short-term sideways channel will create a buy signal. Thus, the euro is expected to enter an upward correction and return to 1.0666. If bulls are able to protect this area, the price may form a false breakout and build a new upper boundary of the ascending channel. In this case, it will be possible to open long positions with a view to catching a bounce to the level of 1.0707. Its top-down test will create an additional buy signal and the euro will rise to 1.0750 and probably 1.0785. At this level, I recommend going short on the rebound. Short positions at 1.0750 and 1.0707 can be considered only amid a false breakout. Speaking of the British pound, it's worth focusing on the level of 1.2583. If the price consolidates above this mark and tested from the top down, the pound sterling is likely to rally to the previous month's high. If the price settles above this area, I recommend opening long positions counting on an advance to 1.2621 and 1.2663. At the level of 1.2663, it will be possible to go short on the rebound. Short positions at 1.2621 and 1.2583 can be considered only amid a false breakout. If bulls are able to gain control of 1.2583 in early trade, the British pound may see a correction to 1.2525, the area of moving averages. A false breakout at this mark will make it possible to buy the pair within a channel. Alternatively, traders will be able to go long at 1.2483 in the event of a false breakout. Long positions on the rebound will relevant only at 1.2432. If bulls trading activity is subdued and the price fixes below 1.2525, the volume of short positions will increase. In this case, the pound sterling is expected to tumble to 1.2483 and 1.2432. Good luck.